So hello traders, welcome back to another episode of the technical market breakdowns. So for the last 2 or 3 weeks, we were not able to upload anything on our YouTube channel. We had a few technical difficulties here and there, which are normal if you're in the content creation process, but we're back and we're now back fully and consistently. So I'm going to be looking at markets, what I expect will happen from a technical fundamental perspective. Fundamentally, I think there's a lot that is likely to drive markets this week, starting with the Fed's interest rate decision tomorrow. We have non-farm payrolls on Friday. We have the Bank of England on Thursday, interest rate decision. Last week we had European Central Bank, and the previous week, I think last week, still earlier in the day, we have Reserve Bank of Australia. What do I think will happen fundamentally? I think the Feds are moving closer to lowering rates. At least we're certain they won't be hiking rates. However, I don't think this July meeting is the one they lower rates with. I think they still need more data, they still need more time. So I'll be keen to see what will happen on that front. If they lower rates, I think it's already priced into the markets. I think either 25, 50 basis points is already priced in. The question is, how many basis points will we have and what will be the path moving forward, or how the economy will react to the rate cuts. So that's on the interest rates. On Friday, we'll be having non-farm payrolls. So unemployment numbers in the US. We're keen to see how many people are unemployed, or how many people have lost jobs, and how does that correlate to reflect in the stock market. So we'll also be looking at non-farm payrolls on Friday at 3:30 p.m. So a very volatile week fundamentally. There is a lot of opportunity, but so is there a lot of risk. I mean that you could have your trade on Wednesday, pegged on a particular direction based on rates, and on Friday it could reverse completely pegged on a change on non-farm payrolls. Okay, so we'll also be looking at the Bank of England. What will they be doing with the interest rates, and looking at the relative speeches of these people. So that's on the fundamental perspective. I think the US election is also drawing near. So it's drawing very near. It will happen in November, so clearly we have about 3 months till then. Only August, September and October for campaigning. I think that will also send markets into some quiet period, some level of uncertainty until that is quite figured out. But I think that will happen probably towards the election completely, probably the last weeks of the election, probably two or a week towards the election. I think that time is a healthy time actually to take a break from the markets and just observe what will happen, who will come in, what policies will they implement, how markets will react, what trends will develop, what policy changes will be made. Because I think from my experience in markets and fundamentals mainly deal with policies that are being implemented, and then those policies, how they seep into what the real economy does, and then the stock market is the after effect of that. So you really need to understand policy making, and you really need to watch out on what policy makers are doing. That includes fiscal and monetary policy, and under monetary policy we have interest rates and all that, and then under fiscal policy we have taxation and what the governments do to try and bring the economy to do well. So on a fundamental perspective, that's what we are watching. Inflation has come down significantly in the US. We're now around the 3-point-something range. I think recently I was listening to Powell, and he was saying inflation is now back where he wanted it to be, or where he thinks it's a good time for him to switch to not only watching inflation, but watching inflation and also the unemployment rate, which is their dual mandate. That's what the Feds are likely to do, or that's their job. Now, technically, there's some positions that might come along. But I won't look at all markets. Probably I'll look at a couple of yens, a couple of indices, a couple of currencies, and probably some gold and oil. Let's just see where the general market generally is trading, and then you can know how to position ourselves during the week. So let's get down to the charts. I'll start with gold, which is on top of my watch list. Gold has really moved higher this year. I think this year we saw a breakout. If I look at it from the monthly perspective, when you're trading, you try and form the big picture perspective of what's happening, then you can narrow down to the short-term moves that are taking place in the market. So if you look at a market like gold, if you pay attention keenly to what gold has done, ever since 2018 there, around 2018, 2019, gold started, no, 2022 to be precise, gold started this bullish rally, moving all the way from about 1600, moving higher all the way to about the 2000 level. We then had a correction from the 2000 level, sending markets back to fair value area, and then you had a clean rally from the fair value area, pushing markets all the way to the R3 area. Okay, so we've gotten a couple of insights for this year. One, we've gotten the first solid close of the year above the 2000 level, and not only a solid close, we've also gotten a significant rally, sending markets from 2000 to 2400. Now the question is the bull market over, or do we still expect some upside momentum? For me, fundamentally, I still expect some upside momentum. I think gold has really rallied in an era where interest rates are quite high, and I don't think that's going to reverse when interest rates start moving lower. Instead, I think the bull market is likely to continue. How far do I think it will go? I don't know. However, on the short term, I expect some bearish momentum to come into the market, especially if prices can remain below the 2400 level. So what I'm looking for is a potential sell-off back to probably 23, 22, 2100 at the extreme, before another significant bullish rally. But that one would also have to have a catalyst, to draw back markets that far, especially to the 2100. So for now, that's my outlook on gold for the monthly chart. You can see, as I'm doing this, it's on Tuesday. We have 1 day till the month ends, and you can see clearly 2400 has been rejected now 3 times, first time, second time, third time now, where price has tried going above 2400, and it's clear price is not breaking. Now if I break it down to the weekly chart, it becomes quite clear. Okay, so on the weekly chart, you can see I have this leg up, a correction back to fair value, very beautiful trade, and then a clean rally from 2000 all the way to 2400, no correction, 4000 pip leg, the quickest 4000 pips you will have made. And then markets consolidated. So ever since markets got to 2400, they've been moving sideways for a couple of weeks now, I think since April. Yeah, so you can say the whole of May, June and July, markets have been moving sideways. So we've not seen much on gold other than a consolidation between 2400 and 2300. Now if you look at the last 2 previous candles around the 2400, they're signifying that bears should have it, that markets should continue moving lower. How low? I think markets, if they move lower and break the 2350 level, I think we could easily tap 2300. And that's my first target on the downside. However, I would only pivot to bullish, or I would only pivot to a buyer if we get a close above 2400 on the weekly chart, not on the daily, not on the 4-hour, on the weekly chart. I want a solid close above 2400 for me to move from longs to shorts, or rather for me to move from shorts to longs. So that's my outlook on the weekly. If I go down on the daily, prices are still trapped in the consolidation, that you're talking about. So you can see clearly, here it looks like price, is trying to move higher, but generally price is still trapped within that consolidation that we talked about, 23, 2400. Here we've gotten to 2450, but quickly came back down. Now we are 2400. You can see yesterday's close was quite bearish also. If prices remain below 2400, 2350 could be attained. If prices close above 2400, 2450 could be attained. But I'd want a solid close above 2400 for me to pivot from shorts to longs. I'm more bearish than bullish. And if I go down on the 4-hour time frame, you can see clearly that markets are trading around the fair value area. We had a collapse last week from around 24.25, sending markets to as low as 23.62. Found support there, came back to retest the 2400 level, and now we've been trading around the 2400 level. So not much has happened ever since yesterday when markets opened. So waiting to see what will happen on that. If it remains below 2400, a sell-off to 2350, 2340 is very likely. If we close above 2400, I don't see a reason why we won't attain 2425 and probably 2450. But this is a trade that has a lot of moving parts. So it's not a clear directional trade which you can say, let me buy here or sell here. There are a lot of moving parts to that trade. In my perspective, that is, not in any other person's perspective. Now, the next market I'll look at is the oil market. So the oil market has been behaving in a very, very queer way for the last a couple of weeks. Not queer in that it's not moving or something, it's that it's been moving in a very, very fundamental triangle. You know, prices are trapped around a triangle from the weekly perspective. So you can see price has been trapped around there for quite some time. Ever since January, oil has not done much other than consolidate between 85 and 75 by and large. So if prices break below 75 and they start moving lower, we could easily see oil prices drop as low as $60 a barrel, if that is the direction of the trend. However, if prices remain above fair value area and they start moving higher and we close above 80, we could easily see $90 a barrel. In simple terms, I think there is a very, very good directional trade that is coming along oil in a couple of weeks. So in a couple of weeks, when this market finally breaks out, we'll be able to know how to position ourselves and how to trade this market. Now, if I look at it from the daily perspective, okay, on the daily perspective, you can see what the oil market has done. It's moved significantly lower from the R1. No clear pattern here to suggest anything. We're approaching 75. So watching what price action will do around 75. A break, we'll see 70, 72.5 on the way. Rejection, it will start moving higher towards probably $80 a barrel. Now, if I go down to the 4-hour time frame, in the 4-hour time frame, you can see clearly markets have been selling off, aggressively. So you can see this week we got an opening around 77.5. We've gotten a sell-off back all the way down to $75 a barrel. So not much to do on oil other than watch, but there's a potentially very, very good trade coming on oil. I think there's a lot of money to be made on that, and I think that will also determine whether we'll go into a recession or things will be alright, because I feel like oil is a good indicator of whether the economy is headed in the right or wrong direction. And at this current point, at around 75, we're in the triangle, really, really waiting to see how price will evolve and how things will shape up before markets can develop and move forward. Next market that I'll be looking at is just a minute. So British pound against the US dollar. So on Thursday we have the Bank of England deciding their rates. So if you look at the pound against the dollar, it's very, very clear where markets are headed. I think this one is at least a bit directional. There is more money to be made from such a trade in my perspective. The markets are headed for 1.35. I think before the year ends or sometime early next year, markets could be trading at 1.35. It's very, very clear from my understanding where price is going on the pound. If I go down to the daily chart, you can see clearly that markets have been ticking higher. So we had this initial leg of bullish momentum. We got this correction, then we got another leg of bullish momentum. So currently, where are we trading? We're trading around the 1.2846. I was looking for this steep correction to 275 before the rally continues, waiting for new pivots formation also for me to see how I'll position myself. But I think long term, if prices remain below 275, I don't see how we won't attain 35. In my view, prices are likely to correct probably to 275, find some support around the level, and then start moving higher, towards the 1.3 and probably even the 1.35 level. In the 4-hour time frame, no specific pattern to guide decision making at this point. So out of the market, watching what the Feds will do, watching what the Bank of England will do, and more specifically how price will react to those effects in policy changes. So that's on British pound against the US dollar. Next market that I'll look at is the euro against the dollar. Now, if I look at the euro against the dollar from a weekly perspective, so let me just from the weekly perspective, you can see also the euro is sort of trapped in a triangle-ish formation around the fair value area, meaning for this year the euro has not had much of a sense of clean direction, unlike last year when you can see price was really, really moving higher. This year, price has been trapped here in this consolidation. Now, if I go down to the daily time frame, you can see clearly a pattern here whereby prices moved higher, corrected, and prices then moved higher, rejected this level, and have started moving lower. So if prices remain below the 1.0875 level, we could easily tap into the 1.075 level, which is the next level of support before markets start moving higher. However, new pivots will also guide us on how to position ourselves in these markets. If I go down on the 4-hour time frame, still nothing exciting. For some of these markets, I tend to believe that this is a time to do nothing, at least for me. I have no trade this week. I don't think I'll have any trade. I'm just out of markets because there isn't any clear sense of direction, at least for now, of where markets are likely to go. So looking at it from that perspective, the euro, I was waiting for potential sell-off from this level. We never got to the level market started selling off. So you can see we got a sell-off. We're now at S2. If markets start coming back, break above 0.875, probably a buy. Prices below 0.875, I'm looking for a collapse to 0.75, which is the next downside target. Then besides that, I can look at, let me not look at the Australian dollar, because I feel like that's more of a repeat of what is happening around euro dollar and pound dollar. So what I can do is look at dollar yen. Now, the yen has been one of the most weak currencies over the last couple of years. If you look at what the yen has done, it's come from about 120, some years back, about 2 or 3 years back. It was back in 2022. It was as low as 100 actually. In 2021, it was as low as 103. And we've moved from 103 all the way to 160, okay, for the yen. Now the yen is obviously not trading at a very, very good point. So you can see we tapped into 160 and prices started moving lower. Long term, a collapse to 150 is very, very evident. You can see it clearly where prices are likely to just drop towards the 150 level. On the daily time frame, if I go back, you can see prices have collapsed from 160 down to 152.5, found some support and you're coming back. I'm looking for potential correction back to fair value area around 157.5, probably 158, depending on where the new pivots will be positioned. And then we could get a potential sell-off after that. On the 4-hour time frame, if I look at markets from the 4-hour time frame, you can see, yes, there's this potential 3-drive pattern which is suggestive of prices continuing to collapse. But I'm a bit skeptical of taking part in that trade as much as there are a couple of confluences aligning, including this flag formation that Caleb normally trades. So it's a pair that has a lot of chances of going down. If we remain below 155, we could easily drop towards the S2 level. But as long as we close above 155, I think 157.5 could be easily attained. And if that is the price level, then I think that's a better selling level than where we are currently. Now the final pair that I'll look at is, so the yens will always tend to repeat the same stories again. So now let me look at indices. Let me look at an index. So that's US 100. So if you look at US 100, tell us, how growth stocks are doing in America generally. Because if you look at what defines the US 100, it's 100 of the best American companies in technology. Now, if I look at it from a weekly perspective, you can see clearly prices approached 20,500, rejected, formed 2 bearish candles, suggesting prices are likely to keep moving lower. If prices break below R2, we could easily end up break of 18,500. We could easily come back to 17,500 and R1. However, we could also find support around the zone and we could easily start rallying back towards the R3 level, which is the next upside target. And then if I go down on the daily time frame, you can see clearly that price has been declining from 20,500 all the way to the 18,750 level. So no sign of a correction yet. We haven't gotten any clear sign of a rejection. And if I look at it on the 4-hour time frame, you can see that clearly markets are also trapped in this sort of sideways movement. So you can see prices are trading around the fair value area. So we could easily see 19,250, 19,500 before the next leg of bearish momentum. So I think that's what I'll cover from a technical perspective. I've looked at indices, I've looked at commodities, I've looked at currencies, and more importantly, I've looked at yen pairs. So you can do more research on those pairs, try and understand, and when the facts change, remember to always change your mind. So if you're interested in learning how to analyze markets like we do, the thought process behind our trading, you can reach out to us or visit our offices in Lavington Mall, and we will be sure to extend a helping hand to you for you to succeed in the markets. So with that said, I'll catch up with you guys on the next one. Peace.